Hello everyone, this is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing with episode number 88 of today's The Electrical Economy podcast series sponsored by Champion Fiberglass. The company began producing epoxy fiberglass conduit fittings in 1908 and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. In this podcast, we'll take a look at some of the key leading economic indicators for the electrical market and check out the latest pricing trends from four electrical products from Electrical Marketing to Electrical Price Index. We'll also provide updates for five key weekly economic indicators: initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to Champion Fiberglass for sponsoring today's Electrical Economy series for 2024. For the week ending January the 13th, the advanced figure for seasonally adjusted unemployment claims was 187,000. That is a decrease of 16,000 from the previous week's revised level. This is the lowest level for initial unemployment claims since September 24, 2022, when it was 182,000. The 4-week moving average for these claims was 203,250, and that is a decrease of 4,750 from the previous week's revised average. The total unemployment rate for the U.S. in December was 3.7%. These 10 states had the biggest decreases in unemployment claims for the data for the week ending January the 13th. New York was down 17,176 claims. It stands at 20,808. Michigan down 4,391. It's just over 10,000 claims. Wisconsin was down 4,159. It's down to 6,895. Pennsylvania standing at 14,926. That is a decrease of 3,913. South Carolina saw a decrease of 3,122. Georgia was down 2,786. Minnesota down 2,016 to 6,177. State of Washington down 1,931, now standing at 636 initial unemployment claims. New Jersey down 1,700 claims now, with claims out there for 12,605. And the state of Oklahoma down 782 claims to 1,618. The 5 states that had the biggest increases in unemployment claims for the data for January 13th was California, up 2,994. Texas, up 1,561, now sitting at 19,057. State of Iowa had 1,273 more claims, now up 5,206. State of Kansas, up 1,043. Unemployment claims now totaling 2,506. And the state of Tennessee, up 773 claims, now sitting at 4,075 claims. An interesting leading indicator for the overall U.S. economy is freight rail traffic. It's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR. It publishes this data weekly. The most recent data showed that total U.S. weekly rail traffic was 457,453 carloads and intermodal units. That's down 4.1% compared with the same time last year. For the first 2 weeks of 2024, U.S. railroads reported cumulative volume of 421,453 carloads, which is down 5% from the same point last year, and 453,257 intermodal units, which is up 2.7% from last year. Total combined U.S. traffic for the first 2 weeks of 2024 was 874,710 carloads and intermodal units. That is a decrease of 1.1% compared to last year. We only had 3 of the 10 carload commodity groups posting an increase compared to the same week last year. There were chemicals, which was up 2,591 carloads to 33,076. Petroleum and petroleum products up 389 carloads to 10,374. And forest products up 80 carloads to 8,193. The commodity groups carried by freight that posted decreases compared with the same week last year in 2023 included coal down 10,924, and grain down 8,017 to 18,776, and non-metallic minerals down 4,515 carloads to 25,446. If you track the oil market, you're probably familiar with the Baker Hughes rig count. This tracks the oil and gas rigs that are operating. The data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. And this slide gives you an idea of the largest oil and gas deposits. It really gives you a good sense of just how many of the large oil plays are in Texas and Oklahoma and New Mexico, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. The rig count remains down fairly significantly over last year. The U.S. rig count in total was up 1 rig in the most recent data. However, compared to last year at this time, it's down 151 rigs for a 19.6% decline. And Texas has accounted for roughly half of the decline since 2023. And the decline in drilling activity for the Lone Star State is down 75 fewer active rigs this time last year. That is also a decline of more than 19%. All the major drilling states are way down over last year, although New Mexico has the smallest decline at 3.9%. It's followed by North Dakota with a decline year over year of 15.4%. Rig counts in Louisiana and Oklahoma are both down more than 30%. Despite all the reports of attacks on commercial shipping vessels in the Mideast and particularly the Red Sea, we haven't seen a huge impact on oil prices just yet. For example, the current price of WTI crude oil as of January 19th is $73.74. It's actually tracking below the $77.36 average that has been over the past year. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future activity since copper is used in so many industries. The construction industry is among the leading markets for copper because of its wide use in wire and cable and copper plumbing pipe. Copper prices were at $3.75 on the COMEX on Monday, January the 22nd. That's actually pretty close to the year average, which was about approximately $3.85. Over the past 12 months, copper hit a high of $4.29 in late January of 2023, and it hit a low several times of $3.57, once in October of 2023 and once in May 2023. So as you can see in the slide, copper remains a very volatile commodity, but right now we're tracking at pretty close to the overall average. Nothing too big of a discrepancy right there. Now let's take a look at some recent economic indicators that measure the electrical market. Of particular interest is a survey that Electrical Wholesaling does with the Vertical Research Partners, or VRP, which is an equity research firm. We do it quarterly, and they've got a pretty good database of several dozen distributors that respond each time and give us an idea of where their sales are going and where their pricing is going. They break it down from the electrical market, they've got utility market, and automation. But we've got some pretty good news coming up from what the electrical distributors told them for the first quarter of 2024. The Electrical Wholesaling VRP Quarterly Survey, as I mentioned, had some pretty good news for the first quarter of 2024. Actually, one of the largest increases we've seen in quite some time in this survey, up 4% overall in Q1 2024. Another survey that was fairly bullish was the AIA Consensus Construction Forecast, which measures the forecast of, I think it's about 9 economists tracking the construction market, and it's looking at 2% in the key non-residential construction market. However, AIA also puts out a monthly survey of the billings coming through the architectural firms. And that's a good leading indicator that goes out. I think it's about 9 months to over a year. And this, for the 4th consecutive month, it showed a decline below the 50% level. That shows that conditions are declining. Anything over 50% on the index shows that it's increasing. A broader economic indicator that I do like to track on a monthly basis is the Conference Board's leading economic index. Showed a slight increase, down 1%. They expect this slowdown to continue through 2024, first 2 quarters, and they do see some increases in the starting in the 3rd quarter in their survey. I really like the way the VRP Electrical Wholesaling Survey digs into the expected change in total revenues and how it breaks it down. Those revenues breaks it down by both volume and price supported. And what I wanted to do here is take a look at it going back to, I guess you could say, before all the craziness started, pre-COVID into 2019, and compare where you can kind of see the changes in the survey data and how much of any increase was really supported by prices. And it really shows it quite clearly. If you look in the mid part of the slide there, starting in 2021, while we were expecting some pretty significant increases of over 20% after that lull in COVID when it was at its absolute worst, 2020, you can see we were up looking at expectations up 20%. Good chunk of that volume, but if you look at the red line on the chart, that is increases supported by pricing, and you can see that some of the price-supported increases were creeping up to 7-8% in the second quarter of 2022. Now they're moderating quite a bit too, which is also what we've seen in some data that we've looking at in just a few minutes at the electrical price index. But you look at that red line again, that's the prices that we are keying in on, because inflation is such a big deal for not only the electrical market but the overall economy. But you can see the impact of prices on any revenue increases is definitely going back down and really throttling down pretty well to pre-COVID type of levels. So good survey. If you do get a copy of this survey sent to you, please do take the couple of minutes it would take to respond to it. It provides us with some good data, and you'll also be able to benchmark your revenue expectations with a bunch of other distributors there. I also like the survey that we put together with folks from Vertical Research Partners, because it gives us some good ideas of what distributors, there's key comments at what they're thinking of. And here's a couple of them that we'll go over here that I thought would be of interest. One distributor said they're surprised that higher interest rates did not materially slow down commercial construction project volume. From another distributor, data center market is driving our business in switchgear and our OEM piece of the business. Said another respondent, labor scarcity limiting the ability to pursue growth vectors, including renewables. Heard a lot about the labor being an issue, throughout the electrical market. And also there's some, said one other distributor, evidence of reshoring projects across a range of industries, including semiconductors, electric vehicles, batteries, and metals. Continuing on with some of these verbatim comments, we had a distributor say weaker demand has driven lower bookings and lower sales. Said another person, seeing fewer price increases from 5 or 6 per year at the craziest times, now back to maybe twice a year. Another respondent said switchgear is the main issue on supply chain / availability. And the last comment I want to highlight here, manufacturers filling backlogs finally, catching up on some things, likely still have some issues for years to come. I always like to give our viewers and listeners of the podcast an update of some of the key pricing trends that we're seeing, and that's from what we call the Electrical Price Index. That's electrical marketing has been publishing this for several decades now. We get the data from the folks at Standard & Poor's Global, and they give us information on the trends in more than 20 electrical product categories. This pricing data has been hugely popular across the electrical market, and it's available for only at the cost of a $99 subscription to Electrical Marketing Newsletter. The real big changes in prices have definitely slowed down quite a bit. On the left side, I'm highlighting some of the changes on a monthly level. Right side has some of the changes on a year ago level, and you can see the monthly level, I have those changes highlighted in a light blue. Total index was down 0.1%. That's quite a bit less than the monthly change that we normally see, which is usually can be about, I think, 0.51 over the past 5 years has been the monthly change there. Some of the bigger declines: power, wire, and cable down 1.9%. Panel boards and switches down 1.2%, and switchgear down just about a percent. Some of the other changes were pretty slow, as you can see. They were not very big increases at all. Telephone equipment 1.1%, industrial fixtures 0.2%, fuses 0.2%, and building wire and cable. There's always a lot bigger changes when you look at this stuff on the year-over-year basis. Total index actually was flat, and that's the first time I think I've seen flat index for a year-over-year increase. Compare year-over-year comparison going back well over a year, for sure. Biggest decreases year-over-year basis: boxes down 11.9%, pole line hardware down 11.7%. That's some pretty big double-digit increases for sure. Conduit fittings down 0.76%, non-metallic conduit down 5.8%. Building wire and cable 4.6% for some of the big ones there. On the flip side, we still had some pretty big increases on a year-over-year basis. If you're looking at wiring devices and connectors, up 23.7%. Power wire and cable, while it was down for the month, it was up big time for the year, 14.9% increase. And metal conduit, obviously very reflective of steel changes in the steel market, down on a monthly basis, down 0.4%, but up big time year-over-year, down up 12.8%. Also from the Electrical Price Index on the historical data that's available, and we have this data going back to the 1990s, but I just wanted to key in on what's been happening over the past 4 years, so since 2019. before in the pre-COVID era. Since that time, the average change on a monthly basis in the total index is a 0.5, 0.1% since the beginning of 2019 through the end of, and this is solid through the end of 2023. But if you look at it again, 0.5, 0.1%, you can see when we were in the high inflationary times, the largest was peaking at about a monthly change of getting darn close to 4%. That's pretty huge. It was right from the sort of beginning of 2021 to almost the beginning of last year. We were seeing some pretty huge changes there. But as you can see, it did start to moderate right after the beginning of last year, first quarter of 2023. We definitely saw prices starting to moderate, and right now actually a bit below the average that we've seen over the past 4 years. So this will probably bring some stability to the electrical market pricing scene for sure. Next, we're going to take a look at where prices have gone on a year-over-year basis for that total index. On a year-over-year basis, we've seen change has been 6.6% in the increase compared to year over year. That's actually still quite high. Normally it's a couple of percentage points less than that over the past 4 years, but as you can see, we've had some pretty huge increases to deal with in that 2020 to 2021 into 2022 timeframe. I mean, we've had an increase or right around the beginning of 2022, 20% over the overall index that combines the increases for all the products that we track there. That's pretty huge. You can see how it climbed through the post-COVID era, and it's really just starting to get down to some sense of normally with 6.6% just at the beginning of last year. So it's definitely quite a bit under the average there. And I want to say, if you take this price index all the way back to the 1990s, I believe the annual change for the year pricing of the index is about between 2 and 3%, and it's tracking sort of close to overall inflation. But we definitely got hit hard on some of these base products and some of the base materials driven in large part there. So hopefully that'll stabilize as well. Wanted to thank the folks from Champion Fiberglass again for sponsoring today's Electrical Economy podcast. I know I ran a little bit longer than usual, but there was an awful lot of data breaking that I wanted to get out so you can use for your planning this year. Please contact me if there's any other type of economic data or need some more insight into some of what we are covering in these podcasts. Our next presentation will be on February 12, 2023. If you're going to be at the NEMR show coming up next week in Las Vegas, Electrical Wholesaling will have a booth there. We'll also have our latest electrical sales forecast that we put together as part of our $99 subscription for electrical marketing. So stop by. Glad to share some of that with you, and hopefully get a chance to check out electrical marketing for a membership to, I think, what's a great data source. So until then, hope you have a good day, a good week. And I look forward to talking with you in 2 weeks if I don't see you at the NEMR show that's coming up. Take care.